Well, thank you so much for joining us here on a Wednesday. I'm Marlon Bowling with you as we watch your ag commodity trade. I want to look at our dairy products for you, and we'll start with Class 3 milk and see what the futures are doing. Right now, kind of quiet. December unchanged at $13.89. We have the January contract down 2 pennies. We're now at $14.29 per hundredweight, and the February unchanged as well. Now let's look at what's going on in the butter market today as far as the futures go. And so far, just down a penny on the January contract. It's trading at $2.20, and February down a penny as well at $2.20. Meanwhile, on the cheddar cheese, we'll check out the futures there. Right now, you have your January contract unchanged at $144.3 per pound. We have February just up a tenth of a penny there. It's at $150.1. The far out deferred contracts down in about 0.2 of a cent. Now, if we take a look at our grains, I want to go to the trading floor in Chicago and visit with Scott Gecas. He's with Longleaf Trading, and he's positioned at the edge of the trading floor today. And Scott, thank you for joining us here today. I want to get your thought on the overall grain trade so far.
The tone is quiet, no volume. Everyone is just pretty much standing around, not doing much. With the financials closed and everyone honoring Bush's death, everything is just pretty much quiet. Volume is anemic. There's hardly anything going on. So right now, everything's going to be doing just the headline risk. Anything that comes out of the headlines, you're going to see the markets react one way or the other, same as it's been for the last few months. With the Chinese deal going over from the G20, it's still no deal. It is a little bit supportive. We did see a big, bump in pretty much the markets across the board on Monday. Yesterday, you seen what happened. Everything completely retraced and more. So we're still being focusing on whatever's going to come out of the headlines. Headline risk is the key aspect to anything moving the markets one way or the other lately.
So basically, overall, we're about where we started before last weekend on the markets here. So in your opinion here, are we going to be trading other things now, other than the China news, while we kind of patiently wait?
Well, it's interesting that because the China news are having such a huge effect on just the markets in general. But if you look at the overall fundamentals, especially with the grains, I mean, even if something happens with the deal with China, especially for the soybeans, it's not going to take away from the fact that there's still world-ending stocks are at records. Even if a Chinese deal does come through and they do get those flash sales for soybeans, it's really not going to affect the ending stocks. The December export window is closing very fast. We haven't really seen too much of the exports coming into play. Still not taking away the fact that, the Brazilian crop is still at the strongest it's ever been. The Brazilian exports are over 167% higher versus last year to China. So all those fundamentals are really bearish. The only thing that's going to push this higher and keep it moving a little bit higher is some type of outlandish deal that could happen, but everyone's still waiting for the hope that something gets done.
Well, we saw where the soybean trade is a penny higher right now. A quick look at our corn market, and we'll see how it's doing. The soybeans are a penny and a half higher on the March at 9.25 1/4. On the corn, we currently have the March contract 3/4 lower, though, at 3.84, as you mentioned, very slow. And in the wheat, on Chicago wheat, we have the March contract currently trading 8 3/4 lower at 5.13 3/4. So a lot of weakness in this wheat market once again. We'll come back and talk livestock market when we come back and talk more with Scott Gecas after this. Let's take a look at some soft markets for you while we have a chance, and we'll begin with the orange juice trade. Right now, we have the January futures down 80 cents. We're at 143.40, and we have the March contract down 80 cents. However, it's interesting that you have the May on out all 70 to 80 cents higher right now, so that's a little intriguing market over there in the orange juice trade. Coffee market, here we go with a look at the coffee. The March contract now down $1.05 at 105.85, and we have the May contract down 95 at 108.85. How about the sugar market? How's it holding up today? Well, we currently have the March futures on the sugar down to 2 points at 12.73 a pound, and we have the May contract unchanged at 12.86. And here again, you have the far out deferreds next Summer and fall, they are actually just a touch higher by 2 and 5 cents respectively there. Now let's go to the live cattle board and feeder cattle. They'll see what's going on in the livestock trade. We have the February contracts 7 cents higher at 121.72. That happens to be on the high of the day as we look at it. April now 27 higher at 123.17. Also making a new high as we look at it on the screen. If we look at the feeder cattle trade, let's go to the January. Right now 32 higher at 144.72. And you guessed it, it's now on the high of the day. We have the March contract up 38 at 142.22, and that's the same story there. They're about 80 cents off their earlier lows. On the lean hog market right now, you have the February futures now up $1.05. A lot of firmness all of a sudden in the hog trade. 67.10 is the last trade and a couple of ticks off of its high of the day. The April contract up $1.05 at 71.80. Only one tick away now from its current high of the day. Scott Gecas rejoins us, and he's at the edge of the trading floor. Your thought on the livestock market firming up here?
Yeah, with the hog market, I mean, it's clearly due to the expectation of China continuing to go through their import campaign. You know, the African swine fever has definitely exceeded expectations, well above that 10%. They have yet to release any type of percentages, but we already know it's well above that 10%. We still believe that it's even higher than about 20%. So, I mean, that's a big factor. It continues to spread. There's no cure for it. So we expect them to, you know, increase their imports campaign, even with the tariffs around 65%. So we seen last week that they had the imports of about 3,700 pounds or tons of pork. That was equivalent to about 37% of all of this year's pork. So, you know, with that being said, we expect those imports to increase. But we're going to see how that plays out. Whether this China trade war deal goes through or not, you know, they're going to need that pork. They're already flinched. They're already showing their cards that they have to get it, even with the 65% tariff. So we expect that to continue.
Very good. Well, thank you. I appreciate it, Scott. Thanks for talking with us today. Scott Gecas of Longleaf Trading. He's there at the edge of the trading floor in Chicago, which, understandably, Janet, is very quiet.
Very quiet. Thank you very much, Marlon.